If I talk about international finance, if you expect me to brief you about international finance, what international finance is all about. So before we talk about international finance, let's try to understand what is finance. First, let's understand what is finance. Then we'll try to understand what is domestic finance and how domestic finance is different from international finance. So what is basically finance? Finance, if you search a definition in Wikipedia, finance is all about understanding money management. The art or science of working on money management is basically finance. Okay, everyone. So if you want, I can show you in Wikipedia or you can Google it. The definition of finance is all about how we can work on money management, fund management. So whenever I try to talk about fund management or money management, how that can be achieved, so then we need to study finance under three heads. So the when we talk about finance, we talk about finance as a personal finance. When we talk about finance, it is personal finance. Okay, it is corporate finance. It is a personal finance. It is corporate finance. Okay, it is a personal finance. It is corporate finance, or it is public finance. So when we talk about finance, finance is either a personal finance, it is either corporate finance, or it is public finance. Okay, so public finance is all about related to the government of India, the macroeconomic policies of the government of India, how it can be managed, how the government can talk about the revenues, how the government can talk about expenditure, what all they discuss in the financial budget when they come up with the financial budget. So the debiting and crediting of the inflow or outflow of funds which government of India receive, and how they utilize that fund for the public utilization, for the public development. That is what we study under public finance. So I hope you understood what is public finance. Then what is corporate finance? Corporate finance is all about how a company works. Okay, so in order to work, a company need fund. So whenever a company need fund to work, so that fund is called capital. The fund is the capital what the company need for their working. So the fund what the company working, that capital the company can get by two ways, either by equity, by debt. So you remember we studied the calculation of NPV, IIR, accounting rate of return, payback, discounted payback, all that what we studied. So all this comes under corporate finance. So corporate finance is all about how a corporate functions. A corporate have a liquidity decision, they have profitability decision, they have activity decisions, how they can work on these policies so that ultimately they can increase their value in the future. So how a corporate works, that we discuss in corporate finance. So we talked about public finance, we talked about corporate finance, and now the third thing we need to study is the personal finance. So you already have a subject, I believe, in your fourth semester where you studied corporate finance or financial management. Then you have a subject also called portfolio management. Correct, right? You studied portfolio management, yes or no? Portfolio management, investment analysis and management, all these names, security analysis. Have you studied or not? Tell me. Portfolio management. So guys, I hope you remember, you can hear me. So when we talk about personal finance, guys, personal finance is all about as an individual how I can work on my financial goals. So we all as a normal individual, as a social being, we all are getting infected because of the problem of inflation. So inflation day by day is reducing the value of money. And because of inflation, how the value of money is decreasing, whatever we are earning, that should be enough for us to sustain. At the same time, that should be enough for us to come up with the solution for any kind of financial problem if by chance we'll engulf. So then at that scenario, what is very important for us is to work on your personal finances. It is very important for us to do investment. And whenever we do investment, we can do investment on risk-free assets, we can do investment on risky assets, and wherever we do investments, we'll get investment. So when we talk about personal finance is all about how as an individual we can work on our asset liability management. So we all want to develop assets. Okay. So we want a house in I want a house in Bangalore. I want to go around and I want to explore more in Bangalore. So we all have lot of dream. So as an individual, you, me, all have lot of financial dream. We all can have lot of financial risk in our life. So that risk we can somehow manage by taking insurance. Insurance can be life insurance, it can be mediclaim insurance. So there are different contingencies or a constraint in our life. Then at the same time, you know how the uncertainties are emerging around us. You see how Corona has impacted our life. So it will become very important for us to think very narrowly over the personal finance. So when we talk about finance, guys, finance we can either discuss under public finance or either corporate finance or either personal finance. So this is the domain of looking into the finance. Now you understood this. Now this art of money management, when we talk about this art of money management, now is not restricted to one geographical region. Okay, so we all want to explore more, we all want to earn more. There's no limit of earning, there's no limit of measuring the happiness, there's no limit through which we can gauge the probably how much we can be capable of earning ability. So for that, as the dimension is increasing, as we are living in the world of globalization, liberalization, privatization, so what we look for? We look for an upliftment in our business cycle. So either we are businessmen or either we are normal individual or either we are running a company. We all want to look beyond our footprints. So as a normal individual, what I want, I'm finance teacher. So what I want to teach finance in Singapore. Okay, I want to teach finance in US. I want to teach derivative risk management in US colleges. I'm just telling you, for example. So imagine if I'm company, then what I want. As a company, if I would be a company, then I would have wanted that my company should be there in everywhere in the world. My company should become MNC. My company should become MNC, multinational corporation. My company should there in everywhere in the world. Okay, so either you are individual, either you are company, or if you are government, suppose government of India. So what do you want? Government of India, what the government of India want? Government of India want that around the world, all big investors, all big companies should come and do investment in my country. Tesla recently came to India. So government of India gave lot of benefits to Tesla. Government of India want Made in India campaign. Government of India is running Made in India campaign. Government of India is inviting the big companies from the world to come and do business in our country. So if they'll come and do business in our country, so we will get revenue, we'll get employment, our growth will improve. Okay, our economy will become better. So whenever the foreign companies come and establish their branch in our country, when they'll come and do business in our country, then it is called as FDI. This is called as FDI. FDI stands for foreign direct investment. This means foreign direct investment. Foreign direct investment basically means whenever a foreign company come to our country, they understand the laws and regulation of the particular sector where they want to do business, and then by understanding everything they come and they start working in our country. So whenever any company work on FDI, FDI is done in three ways. Either it is greenfield investment. When we talk about FDI, it is either greenfield investment, it is either merger and acquisition, it is either greenfield investment, it is either merger and acquisition, or it is either brownfield investment. So whenever any foreign company talk about DI or foreign direct investment, it can done, they can do in these three ways. Okay. Yesterday already I talked about greenfield investment, merger and acquisition, and brownfield investment. I hope if you attended my yesterday class, then you would be aware about. In case if you have missed my yesterday class, no need to worry. Recording of yesterday class is there in my YouTube channel. You can go through that. Merger and acquisition can be of three types. It can be horizontal merger and acquisition. It can be vertical merger and acquisition, or it can be either conglomerate. So there are three kinds of merger and acquisitions are there. Read about the difference between merger and acquisition, how they're different from each other. Anyone, any doubt? Anyone, any doubt? Anyone, any doubt? Any question? Any question, anyone? So that whenever any foreign company come and do business in our country, they establish their office. Okay, then they employ our Indian population, and then they'll give them employment, and then probably at the end of the day, whatever business they do, they pay tax to the government of India, and that way when they develop, so probably with their development, we develop, our economy develop. Okay, so why everyone from all part of world want to come to Bangalore? Because of the development of Bangalore, because of IT sector in the Bangalore. Okay, everyone want to be the part of the IT sector. IT sector will generate more than 50% in our GDP. So I hope you are understanding. So foreign direct investment is all about a greenfield investment. It can be merger and acquisition. It can be brownfield investment. Greenfield investment is all about coming up with affiliate, or it is coming up with a subsidiary or a wholly owned subsidiary. If you go through my yesterday video, you'll understand what is the difference between them. So whenever any company and whenever any foreign country or company have interest in the other country, so what they do, they come up in either in the form of FDI, or either they come in the form of FPI. FPI stands for Foreign Portfolio Investment. FPI stands for Foreign Portfolio Investment. Anyone, what is the meaning of foreign portfolio investment? What is the meaning of foreign portfolio investment? Anyone? Anyone? Foreign portfolio investment meaning? So foreign portfolio investment meaning is that you see this word called portfolio investment foreign. So means you are investing in foreign country portfolios. Portfolio basically means that you are not doing investment on one stock, you are doing investment in multiple stocks of the foreign country. Okay, so these players who do this, they are called as FII, foreign institutional investors. We call them as FII, foreign institutional investors. So foreign institutional investors are basically those individuals, those companies. Okay, they are either mutual fund company, they are either foreign banks, they are either foreign hedge fund companies. Okay, they are either foreign private equity firms. So what they are basically, they are registered with the capital market regulator of the country. Okay, where the capital market regulator of the particular country allow or give them an access to trade in the stock market of this country. So like in India, we have SEBI, Securities and Exchange Board of India. So Securities and Exchange Board of India in our country will grant rights to the foreign brokers who are called as FII, who are registered with the SEBI, and then they trade over the Indian stock exchanges like Bombay Stock Exchange or like National Stock Exchange. So they trade on Bombay Stock Exchange, they trade on National Stock Exchange, okay, and thereby what they do, they bring the foreign funds into the Indian economy. Why they are interested with the Indian economy? Because of the growth and emergence of developing countries like India, which are growing at the rate of 9 to 10% year on year basis. When we look into the Western economy, developed economy, they hardly grow at the growth rate of 1 or 2%. So they are more or less, those economies are saturated economies. But when we look into the Indian economy, the Indian economy or Chinese or Russian or South African, these all are developing economies. And because if they grow minimum of 6% also year on year basis, definitely that means your growth totally represented by the stock exchanges, because all the public companies whoever have done the IPO in the past, they are registered with the stock market exchange, and there the trading used to happen for these companies. And because the trading used to happen for these companies, so these are basically public companies, which are, if they do well in the business front, automatically that will create a positive momentum in the stock market, and automatically you'll see a lot of investors start taking interest in that particular stock, and they try to buy that stock. And when that will happen, automatically the appreciation in the share market will happen, and when that happens, then all over the index will improve. And when that happens, our economy will improve. More and more FIIs will try to do investment in our country. I hope you people are understanding this. When we talk about foreign portfolio investment, there the investors can invest anytime, they can remove their money anytime. Only thing, the capital gain tax will come into the picture. Otherwise, that does not bring much changes. So, guys, I hope you understood that when we look into finance can be either, when we look into finance can be either, when we say finance can be either personal finance or corporate finance or public finance. Okay, so this finance can be either domestic finance, or it is either international finance. So whatever we have learned about finance, whatever we have studied about the finance till now, that more or less we studied beyond our domestic boundaries. We look into our Indian accounting system, our Indian accounting standard, Indian gap. We followed our Indian gap accounting standards. Okay, we followed how we can do business looking into only one currency called rupee. And then as a government, we did all possible social upliftment program, or we did all possible taxation policies or monetary policies looking at around how as in India we can improve India. But whenever you look into finance is not only looking for your domestic boundary. Now we all are interconnected with other countries. Okay, so now we need to see beyond our domestic boundary, and then it is very important for us to study this subject called international finance. So when we talk about this subject called international finance, so either you as an individual, you will be impacted whatever gonna happen in dollar rupee movement. Okay, whatever is gonna impacted in dollar rupee movement, no matter you live in some village in some outskirt of India, or you are not doing any business with any foreign countries, you are a simple individual, but even then you will get impacted. You will say, how sir? How sir means, it's very simple, guys. I'll tell you a very simple example. Right now the oil is trading, right now the oil is trading around, in the international market, Brent crude oil is trading around $100 per barrel. So the price of oil in the international market is around $100 per barrel. Okay. Now you know already the price of oil in our country. You'll see it's around 104 rupees, around 104 rupees per liter in Bangalore. Okay. Now if tomorrow, if any Gulf countries, if tomorrow, if any Gulf, probably OPEC countries, oil producing and exporting countries, if they increase the price of oil, okay, they if the foreign countries, if they increase the price of oil, okay, in the international market, so we India, 80% of oil consumption, what we do in India, we import from Middle East countries, we import from Venezuela, we import from Iran. Okay, so if in the international market, if Saudi Arabia or Venezuela, if they increase the price of oil, so what will happen? Then doesn't matter. I have no idea what is Saudi Arabia or Venezuela, but even then I have to pay the price because we have oil and gas companies in India. Okay, these oil companies, they buy this crude oil, they buy petroleum product from these foreign countries companies, and then if they buy at a higher value, then the same thing they will take from us. Okay, so you need to understand that right now $1, if I see the dollar rupee movement, right now if you see $1, how much is the $1? It is around 74, 75 something. So right now $1 is around 74.57. So right now $1 is equal to 74 rupees something. Right now $1 is around 74 rupees. Okay, you need to understand, guys, that these the oil companies in our country, okay, they buy oil. You know that 80% oil we import. They buy oil, and they will buy oil in which currency, guys? If they have to buy oil, they will buy in oil in which currency? Dollar. They have to pay dollar. They'll pay dollar. Iran, that is how the Iran works, right? I hope you know that Iran have lot of sanction, economic sanction from US or Israel. They don't want Iran to develop. So they have put lot of economic sanctions on Iran. So Iran, country like India, China, we cannot buy oil from Iran. Iran used to be our largest trading partner when it comes to oil, but because of imposition of US, we are not able to buy oil from Iran. Okay, so if we try to buy oil from Iran, then or Iran or Saudi Arabia or Oman, whichever country, if we try to buy oil from them, then we need to pay them in the form of dollar. Dollar is the world most liquid currency, US dollar. Everywhere in the world, every form of corporate houses or government transact maximum in the currency which is US dollar. After US dollar, then it is euro, then pound sterling, then Japanese yen, then Swiss franc. All these currencies are there in liquidity wise. So the world most liquid currency is dollar. And whenever we do transaction with any oil marketing companies, we need to pay them in dollar. Okay, tomorrow, if dollar become more than 74 rupees, if dollar become more than 74 rupees, means if the dollar appreciates in future, if dollar appreciates or rupee depreciates in future, if the dollar appreciates or rupee depreciates in the future, then what will happen? We'll have the pain of paying more money for the oil by two ways. First, we'll pay money of high price to the oil because the oil price is actually increased. The first reason is the oil price is actually increased. So for that increase in the oil price in the international market, because to satisfy that we have to pay more money. That is the first thing. Next thing is that if the dollar start appreciating, if Indian economy is not doing well, if dollar start appreciating, automatically earlier we are paying 74 rupees for $1. Now we are paying 78 rupees for $1. So you are getting me. So you are paying in dollar, and what you are paying, that price is increased. Now the dollar value is also increased. So you are getting problem by both the ways. First by increase in the price of oil, and next in the depreciation of the value of rupee with respect to the dollar. I hope you are getting me what I'm trying to explain you. So it doesn't matter, guys. It doesn't matter what is our part of business. It doesn't matter that as an individual how much we are are thinking ourselves to be away from the international finance scenario. Okay, but you have to understand, in every possible way we will get impact if any event happens in any part of world. This in physics is called butterfly effect. If you saw the movie of Kamal Hassan called Dasa Avtaram, so if anyone have seen Dasa Avtaram movie, so there they have talked about how tsunami came in Tamil Nadu. So they have connected the tsunami with the event which happened in 12th century. So there was a time during the Chola kingdom when people were divided into two parts. One set of people used to worship Vishnu, Lord Vishnu. The another set of people used to worship Lord Shiva. And because of conflict which happened between these two set of people, okay, these conflict actually led uh, to the demolishment of a particular temple during that era, and they have connected that demolishment of the temple with the tsunami which came in Tamil Nadu probably few years back. So if you've seen Dasavtaram, you can easily connect with me. So the reason of telling you all this is that, guys, that we all are interconnected. We are living in a global village. So we all, like you, me, you people have not seen me. I have not seen you, but I am right now interacting with you through a global platform. Okay, so I take classes for US student. I teach classes for Singapore people. They have not seen me, neither I have seen them. I don't think so that I will able to see them, because I have no possible. I don't like going abroad. So even then I can connect with them, because possibly that is the only one way, that is internet. So internet has bring all of us very together as a global village, and in that global village we all are interconnected with each other. So international finance is not about how companies do, one company of one country do business with the another company of other country. It is not like that. International finance is has much more bigger dimension. You talk about an individual. As an individual, if you do business, imagine Amazon is there, no? Amazon is there, Flipkart is there, lot of e-commerce portal is there. You buy, you manufacture, you made something, some handicraft. I've seen that from Bangalore to Mysore road. I saw a lot of places where a lot of handmade handicrafts are being sold. Imagine instead of being selling near to the highway, imagine if you publish the photo of your handicraft on Amazon or Flipkart. Or so if Amazon or Flipkart agrees that yeah, we'll sell your product, okay, to anywhere in the world, so what will happen? They will get the order, and the same order will be placed to you, and then you will able to sell your product to anywhere in the world. I hope you are understanding. So our dimension of doing business, because of internet, because of social media, has increased multifold. Now we are living in the world of 24 into 7. Okay, so you we can think about that as a dimension of right now how we can function. So as an individual, if you go abroad, you need foreign currency to do transaction in that country. Okay, you need foreign currency to do business with any other foreign country. So we through export finance, we can sell our product in any part of the world, and then we receive foreign currency, and the same foreign currency we can get back the Indian rupee from that. So a lot of authorized dealers are there who can give us. Similarly, corporate finance companies, every company have a dream of becoming a multinational corporation. Once they become a multinational corporation, they will have presence in all over the world. They will have presence in all over the world. Then they will do business with all other countries of the world, doing transaction with different currencies at the same time. So as a corporate finance, as a corporate, we need to directly or indirectly get connected with other countries or other economies by taking the route of finance, which we called as the international finance. Similarly, with Government of India, guys, if you understand how Government of India works, Guys, I hope you heard of something called Treasury bill. I hope you heard of Treasury instruments, government debt, Treasury instruments. I hope you heard of Treasury instruments. So Treasury instruments are Treasury bill, Treasury instruments are Treasury bill, Treasury notes, Treasury bill, Treasury notes. Okay, it is either bonds, government bonds, debentures. I hope you heard of all these things. So these are basically a debt instrument. These are basically a debt instrument through which the government of India raise money from the banks or from the normal individuals. Okay, so and that way the government of India try to finance their expenditure. I hope you heard of a money market instrument. Everyone, you heard of money market instrument, right? Guys, have you heard of money market instruments? Anyone? Money market instruments?
Yes, sir.
So money market instrument includes what? Money market instrument include treasury bill, treasury notes, commercial paper, certificate of deposits, okay, intercorporate deposit. Money market instruments is basically it's a integrated instruments where only the banks are using it for their day-to-day transactions. Okay, so that is what money market instruments are there. But no, corporates are allowed to borrow money from the money market instrument, but they cannot lend money into the money market instrument. Okay, so when we look into the money market instrument, it is an integrated web network of financial institutions like NBFC, banks, mutual funds, hedge funds. They used to interact with each other. So there, what happens? The government of India also involved. So basically, government of India don't directly involve. Reserve Bank of India on behalf of government of India involves. Okay, and they do transaction. Okay, so because you remember, if you remember term called SLR, there's a term called SLR, statutory liquidity ratio. SLR stand for statutory liquidity ratio. Whatever is the current SLR, that much percentage of money every bank have to invest in government securities. So whatever is the current SLR, suppose right now SLR is 22 or 23%. So current SLR. So whatever is your SLR, so whatever is your SLR, so current SLR as prescribed by Reserve Bank of India, so it is around 18%. So as per the government, as per the Reserve Bank of India monetary policy, the SLR is 18%. So if SLR is 18%, what this means? It is 18% of NDTL, net demand and time liability. So whatever the liabilities the banks are having, they are either in the form of demand liability or time liability. Whatever is the percentage, SLR percentage, that much percentage money the banks have to invest in government securities. Government securities are either treasury bill, treasury notes, or bonds. So when the bank invest in these instrument, then government of India get money. When government of India get money, guys, then when government of India can use this money, for social development program. Now government of India is talking about giving free vaccine to all the population in our country. Government of India during the Corona time did lot for the development of the people, for the development of the society. There are many weaker section of society were there. There are many weaker section of society were there who were struggling during the time of Corona. So government of India had to make sure that all or anyone from any part of India should not suffer. So for that, government of India always have to do lot of social development program. Government of India always have to think about how they can develop as a nation, how they can develop the Indian economy. But you think how government of India get money? Government of India as an individual, government of India is also a person. Like in tax, we define a person, no? So like the same way, government of India is also a person. So now that person also have assets. that person also have liabilities, that person also have debt, that person also have equity. So what the government of India want to, as a country like India, where more than 60% of people are engaged in agriculture, contributing less than 15% in GDP, where the agriculture is not at all taxed. So the limited source of revenue of government of India is only the service sector. And this service sector again totally depend on dollar rupee movement. The service sector is totally depend on dollar rupee movement. If dollar will appreciate more, rupee will depreciate more, then the service sector will get benefited. Otherwise, if the dollar start depreciating or rupee start appreciating, then the service sector will be in loss. So by taxing service sector, by taxing individuals over income tax, do you think that the government of India really get that much fund what they really need to make sure that they can run the whole economy all together and talk about development? That is very big task what the government of India has to do. So in order to do that task, what government of India want that in the government of India debt instruments, or in the government of India equity instruments, the foreign individuals, foreign banks, foreign mutual fund companies, foreign financial companies should come and invest. So that how we talk about international debt instruments. We talk about international debt instruments. We talk about international equity instrument. So they want the kind of popularity what the US Treasury instrument is having, where all part of the world banks or companies or governments want to invest in US government backed securities, US Treasury bill. The same thing any government of any country will want, that more and more individuals, more and more financial companies should invest in that particular country debt instruments. So that only the government of India can generate revenue. They can generate revenue either through FDI, foreign direct investment. When any foreign company come start the operation in our country, pay us tax, or 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 the government of India will generate revenue by taxing individuals like you, me, or the government of India generate revenue by taxing corporates, by taxing businessmen. Okay, so all these ways the government of India get the limited source of revenue. So once they are having limited source of revenue, the government of India, in order that they should not simply borrow money like what our previous government used to do. Previous government, when they were in the power, what they used to do, they simply used to borrow money from IMF, International Monetary Fund, or European Central Bank, or Asian Development Bank. They have borrowed lot of money from these foreign banks, and from these foreign banks they talked about social development. Okay, I hope you are understanding. So that way, if any country try to do social development, then you will face the same consequences what Pakistan is facing right now, where Pakistan is not able to pay their interest on the debt or the loan what they have taken from IMF, or what they have taken from China, or what they have taken from rest of the world. And when you are not able to pay even interest, then you can think about what will be the future of your international financial instruments. There is exactly no future. So why everyone in every part of world want to invest in US Treasury instrument? The Treasury instruments which are issued by the central bank in USA. Why everyone want to invest there? So why US investment in US is considered as a safe haven, as in dollar if we invest, because they are world most liquid currency. So the same thing every country want. As an Indian, I also want my rupee to have the maximum significance in the international market. I want my rupee to be traded anywhere in the world. If I carrying this rupee, if I go to China, or if I go to Hong Kong, or if I go to Venezuela, or I go to Norway, I want my rupee to be digested there. I want there would be some seller who ready to buy, who ready to take rupee from me and give me the domestic currency. So that is only possible if altogether the economy will develop, because your currency is the representation of your economy. So if the economy will develop, automatically the currency will develop. I hope you are understanding. What is rupee? What is rupee? In India, we talk about rupee. So what is basically rupee? Rupee is basically the symbol. Rupee is basically, it is basically a fiat money system mode of transport or transaction where the central bank of our country is authorizing that this piece of paper having some number printed on it can be used as a tender of exchange, which that is basically we look into as a rupee. So rupee as a tender of exchange will be utilized anywhere within the domestic boundary. It can be used anywhere within the domestic boundary anytime in future, and it had value in the past also. That is how we define a currency. That is how we look into the finance sector. Finance is all about money management, and this money management, when we look into it, can be either related to the personal finance, or it can be either related to public finance, or it is either related to corporate finance. So international finance is not only about any individual, it is not only about any corporate, it is not only about any government. International finance is the sense of bondiness. It is a sense of belongingness of us to anywhere in the world, and with any language we can do communication. So like if I know French, I can communicate with French people. Like the same way, if I have euro, I can do transaction with French people. I hope you're understanding. So currency is the language in the financial world to do transaction with any part of the world, and that is how we can connect us with any part of the world. This much for the today class. If you have any doubt, please ask me. Anyone, any doubts? Shivank, Shavni, Saurabh, Nelson, Lokesh, Gagan, Dhanush. Guys, ask me question. Assuming that no one have any doubt, it's time to wind up the class. Thank you everyone. I'll see you all tomorrow. Take care. Bye everyone.